minutes while we wait to see if people want to join. I know tech is always a fun thing for all of us, whether it's your first time or if it's your 1000th time on this. So let's give it a few more minutes since we had more people ask for the presentation today. Quick note, this is being streamed live on Facebook, and if you don't want a recording of yourself, please just leave a message in the chat if you have anything to say and mute yourself in the means of full disclosure. I'll be pausing every few slides should you have any questions. I'll give people till about 2:05 to show up. Is it raining in Galena where you guys are?
By
I think
us,
we're starting to get some.
yeah, we've got some rain here, but it's more of a drizzle right now.
It's getting cloudy where I am, but nothing crazy yet. Though we are under a flash flood watch today here in town, so. Such is summer.
Yeah, I think they were predicting somewhere between 1 to 3 inches of rain, so it could be a lot of rain.
Wow, I'll have to keep an eye on my plants. Okay, gonna give people a few more seconds. All right, good afternoon, everyone. It's 2:05, so we're going to get started. Today, we're going to be going over the Paycheck Protection Program. I call this round 2 because it's the second round of funds approved by Congress, and we're going to be talking about forgiveness and changes since President Trump did sign some new changes into law. This event is hosted by Northwest Illinois Economic Development. Today is June 9th, 2020. And it's the executive director, Emily Legal, who's just going to be going over a few updates and talking about how we can get it forgiven. We will be pausing every few slides so you can ask questions, and whatever we don't get answered today, I will be posting and distributing to you all as a frequently asked questions in addition to what we have on the slides. Again, this is being recorded and streamed live to Facebook. If you would like a copy of the recording, please let me know. If you have any questions that you would not like your name being on this recording, please just put a message in the chat feature on your screen, and I would be happy to answer those anonymously. So, presentation overview today, we're going to be giving you an overview of the Paycheck Protection Program. We're going to be talking about a few changes and applying for a new loan. We'll be talking about forgiveness and frequently asked questions based on what I've heard from you all and based on what I've seen online. Quick disclaimer, Northwest Illinois Economic Development does not offer legal or accounting advice. Please speak with your accountant or legal counsel before making any significant financial decisions. And in addition, we are not responsible for any decisions made as a result of this viewing of this presentation. We are in an advisory role only. So, Paycheck Protection Program, what is it? Basically, when the COVID-19 pandemic hit and a lot of us started sheltering in place, Congress passed a legislation called the HEROES Act, which allowed the addition of funds to go to small businesses to cover about 2.5 months worth of payroll and associated expenses. Unlike traditional small business administration loans, clients apply through a bank and typically get money through within a few days. Eligible entities includes businesses, nonprofits, sole proprietors, and independent contractors, all of whom with fewer than 500 employees and that are affected by the loss of business due to COVID-19 and the associated shelter-in-place orders. The Paycheck Protection Program funds may be combined with the Economic Injury Disaster Loan Program with limitations with regards to forgiveness, but with this, we'll not be going into those today. So how does one apply for a loan? One, you go to a bank, local or regional, or online. I've heard people going to fintech institutions to get these loans. You have the documentation for salary, payroll records, and be prepared for a 2-page form actually saying what your headcount is, what your payroll is, why you need the money, and certifying that you're able to fulfill the requirements of the loan. And businesses with this round have until the end of June, until June 30th to apply. While the first round of Paycheck Protection funds did run out relatively quickly within the first 3 weeks of the program, Congress did approve around with over $200 billion in funds. As of last check this morning, there is still about $130 billion of funds left to be awarded, and we want to make sure you get these out. If you haven't applied for this and you think you might be eligible as a result, or if you have a colleague or friend who you think might be eligible, please do reach out to Northwest Illinois Economic Development, and we would be happy to answer any questions as well as help them find a lender. To apply for a loan, you would need you're eligible for up to 250% of monthly payroll expenses as defined by the following: salaries, wages, and benefits, including health insurance, retirement, and vacation time, state and local employment taxes, and a sole proprietor independent contractors equivalent of this as defined by 1099 or equivalent reporting. This loan is 100% forgivable as long as 60% or more of this is spent on payroll. Note that this is 60 versus 75, a significant change from before, as President Trump did pass these new changes into law last Friday. So I think what most of you are here to discuss is program forgiveness. With these changes, Congress has made it just a little bit easier to get your loans forgiven. As of this week, you now have 24 weeks from the receipt of your loan to spend the money. This is a change from the original 8 weeks and reflects lobbying on behalf of our small businesses who pointed out, rightly so, that with the current restrictions in place by many of our governments, a lot of our small businesses aren't open to full capacity or a full level of prior activities, as opposed to this time last year. As opposed to requiring everything be spent in the 8 weeks, Congress did provide some more flexibility. For those of you in phase 3 here in Illinois, you may not bring back your full staff until phase 4 or phase 5, especially for our restaurants. So while you still only have 250% of your average monthly payroll, you don't have to spend it all at once. As noted in a previous slide, you now need to spend 60% of your award on payroll versus 75%. As many of us are very small businesses and rents in some of our areas are quite high, to put it nicely, this allows for small businesses that are more rent heavy to get some more forgiveness. So per your documentation, 60% of your award must be spent on payroll, which is down from the original 75%, with the other 40% being spent on eligible expenses, as we'll get into later on. For your rehiring, rather than the previous mandate, which had noted that you had to have all of your full-time employee headcount back to pre-February 15th levels by the end of June, you now have until the end of 6 months following the receipt of your award. So if you received the award April 1st, 2020, you would now have until October 1st, 2020 to bring back your employees, or if you were to receive your loan June 30th, you have until December 31st to bring back your employees. You have 6 months or until the end of 2020, whichever is sooner. In addition to this, federal payroll tax can also be deferred for the employer section until that, with 50% of this payroll tax being due at the end of 2021 and the other 50% due at the end of 2022. Headcount requirements have been modified just a little bit. So if you were to extend a written offer of employment to an employee who had been laid off and they were to decline it, this loss of this employee does not count towards a loss in or drop in full-time equivalent headcount as noted prior to COVID-19. In addition, if you have a business whose hours and or scope have been limited by state and local regulations, for example, some of our restaurants, your headcount requirements may be reduced due to these requirements. Finally, you have 10 months to apply for forgiveness after the last day of your covered period. So after the 8 weeks following, you now have 10 months to get your documents in order. And if you are forced to repay these loans, this repayment is deferred until the final forgiveness decision is made by the banks and the SBA, which, according to the documents that I reviewed this morning, could be 60 days for the bank and an additional 60 to 90 days by the SBA. So as long as you have applied for forgiveness, this time period does not count towards your period for repayment at that time while you wait to hear back. I'm going to pause. What questions do y'all have right now? Do we have any questions so far? All right, next slide, if I can find technology, if technology wants to work for me. Oh, chat, I see someone in the chat. I'm gonna pull it up really quick. Do you know what documents are needed for forgiveness? I am going to get into that next. In a few slides. So 8 weeks of qualifying expenses. What are these qualifying expenses? Qualifying payroll include payroll as in wages to employees, health insurance, vacation pay, makeups for tips, and state and local taxes for the employee. Other expenses may include rent, utilities, and accounts payable or loans incurred prior to February 15th, 2020, and mortgage interest, not mortgage principal payments. Documenting everything. Basically, if you look at the SBA documentation form, which I'm going to pull up in a second, what they want for documentation includes bank statements showing wage transfers to the employee and payroll. It can also be payroll tax filings based on what would be reported on tax form 941 for the IRS, and state quarterly business and individual wage reporting and unemployment insurance filings. It could also be payment receipts, canceled checks, or account statements documenting the amount of employer contributions to employee health insurance and retirement plans, as well as eligible utilities. Rent and lease payments can be documented through lease agreements and receipts or canceled checks. And utility payments would be copies of invoices, canceled checks, or account statements verifying these eligible payments. So your typical documentation, payroll records, tax records, and invoices and receipts. Bank statements, which you would also be an acceptable form of documentation. Thank you for asking that, and I lost my slide. All right. One method I have confirmed with our bankers on how to document everything is to create a separate bank account for the Paycheck Protection Funds and only transfer them over to your main checking account as necessary. And then keeping very careful records and statements and documenting everything. So make sure you have payroll records and keeping these in a separate file so that when it does come to going back to your bank to ask for forgiveness. There is an error on this slide. The 5 years only applies to loans made after June 5th, 2020 with the new passage of the Senate bill. If you choose to take the Paycheck Protection Program as a loan, you still have 2 years to pay it back as opposed to 5 years, but it is at an interest rate of 1%, the first 6 months with no payments whatsoever. If taking the Paycheck Protection Program award as a loan is something you're considering, I would strongly reach out to your bank to discuss this plan for repayment so that you are both on the same page and they know what it's going to look like. In addition, the 5 years to pay back at a 1% interest rate was written with wiggle room to the banks, as it seems like some of them would be wanting to claw this back as soon as possible, and they are given some discretion in how they can work with you. Some frequently asked questions that we've come across. As an owner, do I count as an employee? You do not, but the Paycheck Protection Program does allow for claim compensation under this program for a maximum of $15,000. While you're not technically counted as an employee, you can get reimbursement for your income. Who can apply? Businesses with fewer than 500 employees that are impacted by the COVID-19 pandemic and shutdowns, LLCs, S-Corps, self-employed and sole proprietors are also individuals who are eligible who did report a profit in 2019. One obstacle that I've come across in speaking with multiple bankers is that small businesses, sole proprietorships who showed a loss in 2019 were not eligible and they were forced to go to other forms of payment or apply for unemployment benefits. However, if you are a 1099 contractor, I would definitely look into this just to see if it's an option for you before you apply for unemployment, as those lines have been obstructed. One additional note, if you are a business like a gallery that employs a lot of 1099 employees, each 1099 employee would have to go to the Paycheck Protection Program and apply for their own reimbursement to be covered by this. Unfortunately, it would not count towards your award because they want it to go to individual businesses and be spent on payroll specifically. Another question I received about what about employees who voluntarily quit or are fired for cause. So these are things that are normal cause of doing businesses. If your employee voluntarily quits or reduces their hours, these headcounts are the same as the full-time equivalency before the crisis. You do not need to replace them if this was voluntary. Or if they were fired for normal reasons, like not showing up for work, poor performance, etc., just make a note and have documentation and a written record. Also, if you offer an employee that had been furloughed their job back in writing via an email or via a letter and they decline, that is not counted against you when you're applying for the forgiveness. One other terminology question that I saw that I found could be relevant: what is the difference between paid and incurred expenses? Expenses paid, this comes from a Forbes article, expenses paid are the checks written during the time period, while the expenses incurred are those accrued. So expenses paid that would be quite common would be an electricity. You received your award April 15th and you were paying your March electricity bill on April 18th. This would be an expense paid during the COVID-19 award period, while if you incurred an electricity bill in June, but the payment wasn't due until July, these could both be applied to the forgiveness application, with the exception of mortgage interest, which is due on a monthly basis. This is a general program overview that I have. What questions can I answer from you all? Again, feel free to put questions in the chat should you have any, like one attendee did earlier. How is this going for you? Have you started working with your banks on forgiveness, or are you still not quite to that point?
For me, we're kind of waiting to see what the bank says till they come out with a statement. We've been waiting to see how these changes roll out, and then kind of waiting to see how our bank proceeds with that. We're using Illinois State Bank, so
Okay.
kind of on a wait and see. But we're
That's
glad
good.
this got passed.
Indeed, I think it's really helpful. I think the 6 months time period for spending the awards is going to help a lot of businesses that might not have applied because they didn't think they could bring everyone back by the end of June. So we might see a few more applications. I hope we see a few more applications for this before the end of this month.
Galena Sellers is also waiting a bit until we have a little bit more information from Illinois State Bank with some guidance on applying for the forgiveness.
Are there any additional things you could use guidance on, or would like to, or questions you would like to see answered in a follow-up?
We are feeling fairly comfortable with things. Yeah, the extension was huge. The extension really lifted a lot of weight off of our shoulders because that is going to be super helpful to have it for the 6 months the 6 months instead of 8 weeks.
Good, I'll pass that along. Another question, do we know how long the extra $600 a week for unemployment lasts? At this point, it looks like it lasts until the end of this month. July 1st is when things go back to normal for unemployment. Right now, there are rumors that it might go through December, but I don't quantify anything as more than hearsay until I see it pass both the House and the Senate and it gets to the president's desk, which is why I scheduled this webinar on Thursday while I knew the president would sign it on Friday. If it does get updated, I will let you all know as soon as I can. Any other questions that I can pass along to people? I hope you found this helpful. I will be in touch as more changes roll out, because if there's one thing that's constant during this pandemic, it's change. So that's all I have for you. Thank you all for joining us. I hope you have a great rest of your day. And as always, if you have any questions, please reach out to Northwest Illinois Economic Development, and we will get back to you as soon as we can. Have a great day, everyone.
Thank you, Emily.
Thank you. Thank you.